Hi students. So welcome all of you to the beginning of a new chapter. So in this session, we'll be starting with the chapter of final accounts of a cooperative society. Okay. So it's a very simple chapter. If you ask me, the only thing which you will have to take care of is the format, the format of the final accounts. Now, in your syllabus, you have two categories of cooperative societies. The first category is a cooperative housing society. Now, many of you may be staying in a cooperative housing society. So we'll talk about it at a little later point of time. And the second type of cooperative societies, final accounts, which is there in the syllabus, is a consumer cooperative society. Okay. So basically, as the name suggests, cooperative. So uh, the underneath current under this organization is cooperation. Okay. So we have seen, or you must have seen that when two or more persons they want to come together and make profits, they come together for a common purpose to earn the profits. They may enter into something called partnership. Okay. But partnership has its own rules. There's a partnership act which governs the partnership business. There are rules framed under partnership act. But when two or more people they come together for a common purpose, but they don't want to become partners. The goal is common, but they come together and they form an organization. Then that organization is named as a cooperative organization. So cooperative organization is also a form of corporate organization where the people coming together are not called partners, but they are called members. So if you are staying in a cooperative housing society, most of us have this notion, this illusion, okay, and it doesn't even, is present to us. We don't even are aware that we say, I have an ownership flat in a particular society, but actually we are not the owners. We are simply members of the society. The flat, the apartment belongs to the society, and the society has just made you a member and they give you a share certificate. You are a shareholder as a member and you are allowed to use the premises. So it is not an ownership flat whenever you are staying in a cooperative housing society. It is not ownership. We feel that we are the owners. Actually, you are a member. If you see, any notice uh, for a meeting or something, if you have read a notice of your cooperative society where you stay, housing society, they will say all the members are hereby informed. So they will say members are informed. They will never say the owners. Clear? So one type of society, as we have been discussing, is a housing society where people come together. The common purpose they have is to stay together. Okay, and for that purpose, they form a cooperative society, and then there'll be committee members. There'll be people who are enthusiastic, people who have knowledge, people who have experience, people who have time to devote to the functioning, proper maintenance of the society, proper running of the society, because the society is governed by the Societies Act. That also has rules to be followed. Okay, it has to prepare its annual accounts, it has to file its annual accounts, returns, etc. Even a cooperative society will have to pay taxes on the income it generates. Okay, so there are rules to be followed. So there'll be committees made. The committee members will be elected. There'll be election process, a democratic process, where people who want to stand for becoming a committee member, okay, they will stand for election. Then they'll be nominated. They'll be elected by the other members. of the society. Then within the committee, they will have election for the posts like the secretary of the society, the chairman of the society, the treasurer of the society. Okay. Then they will also have subcommittees, within the main committee. In a committee, if there are, let's say, 11 people, okay, then they will have subcommittees. Like, for example, they can have a sports committee which takes care of the sports in the society. There can be entertainment committee. There could be a maintenance committee. There could be a repairs committee. So there can be small committees made within the committee to take care of various functions for proper functioning of the society. Is this clear, guys, so far? Yeah. The other type of society which you have now, this housing society is not basically a you can say a profit making society, because the main intention is to stay together, okay, in the building constructed by the society, and the purpose is to stay together. So it's not actually a profit making organization. But the other type of cooperative societies, like consumer credit cooperative society, cooperative banks, okay, you can have agricultural cooperative society. So their purpose is to make profits. So there can be a society of agriculture, the farmers cooperative society, where their intention is that whatever crop, okay, they are producing, they will give it to the society, they will sell it to the society, and the society will distribute it, okay, and try to sell it at as high price as possible, and thereby make profits for the members who are the members of that cooperative society. There can be milk cooperative society, okay. So there can be different cooperative societies which is formed with the intention of the people having common interest coming together, becoming member of the society, and thereby making profits. And then the cooperative society can distribute the profits to its members in the form of dividends, just as a company can distribute dividends to its shareholders. Okay, and even in a company, you are called a shareholder, you are a member of the company. Similarly, in a cooperative society, you are a member of the society, and you are also given a share depending on how many shares you have subscribed for, and then you will get the dividend as per the depending on the number of shares that you are holding. Okay, so there are basically two types of societies in your syllabus. One is the cooperative housing society, and the other is a consumer cooperative society. The purpose of housing society is not to make profits, but to provide facilities to the members who are occupying the flats in the society. And the purpose of the consumer cooperative society is to make profits. Okay. If I talk about cooperative banks, have you heard about any cooperative banks in India? You just shout out the names if you know. Saraswat Cooperative Bank. Yeah, okay. Then there is some SVC, Shamrao Vittal Cooperative Bank, if you have heard about. There is Maharashtra State Cooperative Bank. Okay. So there are different cooperative banks. Now, the intention of this cooperative banks is to make profits, to collect funds from the public, to give the funds to those who require, to earn the interest just like a commercial bank, and make profits. Okay. So now, as I was mentioning in the beginning of the lecture, it is actually a very simple chapter. The only thing is that the under the Societies Act, okay, Cooperative Societies Act, there is a format prescribed for the housing society, and the format for consumer cooperative society is little different. So first we'll start with the housing society, and I'll be sharing with you the format. My request and recommendation to all of you will be, you know, to understand which item of expense, income, asset, liability will go under which head. Okay. Once you are settled with that, solving of the sums is going to be extremely simple. Okay. But first, we'll have to absorb, we'll have to remember that under which head, what category of items of expenses or incomes or assets or liabilities will be recorded, and vice versa. Which item of expense or income or asset or liability will go under which head of the profit and loss account or the balance sheet. Now, in fact, as I was mentioning to you, that in case of a housing society, the intention is not to make profits. Okay, and therefore, a housing society will not make profit and loss account. A consumer cooperative society will make profit and loss account because there the intention is to make profits. And if it is trading in something, it will also make a trading account. But a housing society will make, instead of profit and loss account, something called income and expenditure account. And if the incomes of the housing society is greater than the expenses, they don't call it profit, they call it as surplus. And on the other hand, if the expenses of the society is less than the incomes, okay, then it is called deficit. Now, in case of a cooperative housing society, what will be the income? To run the housing society, there can be so many expenses, right? So I invite all of you to think, okay, of the building, the flat, the society that you are staying in, okay, and think of what could be the expenses, okay, for a society. Just let's shout out the names of the expenses you can think of.
Property tax,
Property tax, okay. Water charges, very good. Electricity charges of not the individual flats. Okay, see, if I'm staying in a flat, let's say flat number 2106, okay, then the electricity which is consumed within the flat will have to be paid by me personally. But the electricity of the common area, you know, the passages, the electricity to run the lift, yeah, the electricity to run the water pump, yeah. So all those common area electricity charges will be paid by the society, right? Okay, very good. Go ahead. What else? Repairs and maintenance. Okay, so it could be repairs and maintenance of all the assets the society has. So think of what assets the society could have. The lift maintenance, very good. Okay, building maintenance, got it. Okay. Watchman is not maintained. We are talking about repairs. You don't repair a watchman, you replace the watchman if he's not working. Okay. So right now we're talking about repairs. So what comes under repairs? So see, there can be water leakages and all, which so plumbing work has to be done. The repairing of that. If there is a water pump may have to be repaired. There'll be electrical transformers, yeah, the generators, right? They may have to be repaired and they may have to be maintained also, guys. So there'll be annual maintenance contracts also, AMC, you know, for the lift, for the pump, for the generator, okay, for all of these assets which a cooperative society will have. Yeah, good. What else? Yeah, as someone was saying, the security, definitely. Okay, the security charges that you have to pay. Salary to staff means which staff? Okay, so salary to the liftman, watchman, all of that. What else? Salary to who else? Okay, gardener. Okay, if there's a garden, park. Yeah,
manager's
so
salary,
housekeeping. Kachanawala is housekeeping basically, right? Okay, fine. Think. See,
manager's
this.
salary,
Sorry,
manager's salary,
manager salary. Okay, fine, great. So you have, if you are appointed, which normally every society would, they would appoint a manager. Okay. See, the committee that I was talking about is volunteers. See, if I'm interested in taking care of the society where I'm staying, I can be a committee member, and I may take active part in the functioning of the society. But a committee's job is to make decisions, and then a manager's job would be to make sure that those decisions are implemented. So there'll be a manager who will be taking care of the day-to-day functioning. Good. So manager salary. Okay, get it. Very good. So society can plan for various festivals, and it can collect funds from the members and out of that they can spend money on Diwali and Navratri and whatever all functions which the society can think of celebrating together. Okay, good. Maybe they arrange annual functions, once in a year, where the members, the kids, the women can participate and perform. Okay, yeah. Okay, what else? Cleaning charges also, housekeeping basically, right? Housekeeping takes care of all of that, guys. Yeah, what else? Depreciation on the assets, very good. Municipal taxes, property taxes, yeah. Okay, great. What else? Auditors fees, very good. You will have to get the accounts audited. Yeah, what else? Fire safety service, yeah. So basically repairs and maintenance. Okay. What else? What else can you think of? So have you seen a society office in your society?
Yes.
There'll be a separate place for the society office where the meetings will be conducted. So that will be meeting expenses. And every society is supposed to conduct at least one AGM, annual general meeting. Okay, after the financial year is over, they will have to present the draft financial statements, okay, to the members. Okay, so AGM expense or any meeting expense. Okay, then in the office, you will have files. So printing and stationery, postage and telegram. You can have a telephone in the office, so telephone expenses. Yes, no?
Yes.
Yeah. So these are the maybe even you all forgot about parking space. Yeah. So there'll be expense for that. Now these days, the parking, especially in the city like Mumbai, okay, is a huge issue. So you may have still parkings, the car above the car above the car, So you will have to have a driver, especially, okay, one watchman who is a driver who just takes care of getting the cars out and getting the cars in and all of that. So expense for that, right? So all these could be the various expenses for a housing society. Now, where will the housing society get money from?
Renting out banquet halls.
Renting out a banquet hall if the society has a banquet hall. Society could have a gymnasium, a swimming pool. All of that has to be maintained. Okay, fine. But what would be the main source of income? Maintenance will be charged to whom? The members. Every member will have to contribute towards all these expenses. So the main source of revenue, okay, will be either, ideally it is not called revenue because the society is just collecting funds from the members to take care of the expenses. Okay, the intention of the society is not to make the profits from the members. Okay, it is like आपके लिए खर्चा हो रहा है तो आप contribute करो. It's like the members contribute and then the common expenses gets taken care of out of that the subscription, sorry, the membership or the maintenance charges which they are paying. Clear? So that is one of the main sources of income. And apart from that, we will see further that every society is supposed to have a statutory reserve fund. Statutory is by law. Legally, they were supposed to have a reserve fund, which we call a statutory reserve fund. And out of the surplus, okay, of the current year, 25% has to be transferred to the statutory reserve fund. If you all have done by chance a chapter called Banking Company Final Accounts, even in banking company, you have to transfer 25% of your current year's profit to statutory fund, if you remember, if you have done it. Okay. So same way, even a society has to transfer to statutory fund. Apart from that, they can create funds like building repair fund. Okay. And every year, a certain proportion or flat has to be transferred to the building repair fund, so that after certain years, 20 years, 30 years, the building will undergo depreciation. The building will have to be repaired. The cracks may come up, and the leakages may happen, and you may have to do a structural audit of the housing society, where authentic authorized engineers will come and do the structural audit of the structure of the building, and they will suggest what actions to be taken. So that could be a major expense. Okay, repairing the whole building. Okay, so for that, you if you suddenly tell people overnight that you have to contribute 5 lakhs per flat, it can be a issue for the people to contribute overnight. So what a society would do is that every maintenance bill, okay, they may give a quarterly maintenance bill for three months. In every bill, certain amount will be collected for the building repair fund. Okay, so all this money will be collected from the members, and then it will be spent for the different expenses necessary to run and to maintain the society. Okay, now if the funds are collected, they may invest the money, because so long as the repair work is not to be done, what will you do with that money? So you may create a fund, and then the fund money will be invested, so you can have a building repair fund investment. On those investments, the income will be generated, yes, no, interest and all. And also from the surplus funds, the cooperative society may invest money in fixed deposits, in the shares, or you know uh, mostly it doesn't invest in the shares of the companies and all. It is not allowed. There are rules. Okay, they can invest in the cooperative society only, in the shares and all. So on that, it may earn dividend. So interest or dividend could be other source of income for the society. As some of you are saying, that if the society has a good amount of space for a banquet hall or something, it may give it on rent for certain events and earn income, rental income out of it. Okay, what else can you think of could be the source of income?
Fine, sir.
Yeah, so fine and penalty, maybe interest charged to defaulting members. Okay, but defaulting members are such, उनके पास से maintenance का पैसा collect करना ही वांदा है. It's a pain in a wrong place. So collecting interest is all the more troublesome. Okay, then yeah, so transfer fees. Okay, when a member transfers the flat to another person, the society may charge transfer fees. But ideally, I will teach you this point, that when a new member is made, you may charge entrance fees to that person to make him a member, and the transfer fee. These two are only when a flat is transferred from one person to another, and that happens very occasionally. Okay, how many times in your life you sell a flat and buy a flat? So such receipts are treated as capital receipts and not revenue receipts, and therefore transfer fees and entrance fees, unless otherwise instructed to you in the question, will be treated as capital receipt, and it will be added to the statutory reserve fund. Okay, these days one of the other incomes which a society can have is the tower rent, mobile towers. So you may allow the mobile company to install a tower on your terrace or something, and they may be paying you rent, which will help the members of the society have a substantially low amount of maintenance charges, because those mobile company may pay you a hefty amount. You are risking yourself with cancer, so they don't mind paying you, right? Advertisement, how society? Billboards, yeah. So if in your terrace or somewhere you're allowing the billboards and all of that, you may earn the rental income. Very good. Scrap sale, yeah. So there could be some scrap generated, okay, and which could be sold. So yeah, great, fine. So this was just to give you idea about what items of expenses and incomes could come in the income and expenditure account of a society. Okay, and we can also think of the balance sheet. Yeah, so in the balance sheet liability side, what items could be there? First, share capital, because every member will be issued shares. Yeah. Okay, great. What else? Reserves, reserve fund. Okay, as we spoke about statutory reserve, building repair fund. Okay, all of that. Okay, fine. Then, yeah, borrowing. So if the society needed funds and it took the loans from the banks or from other cooperative banks or other cooperative society, okay, then the loans, the borrowed funds, okay. Then what else could be there? Tell me. Think. What other liabilities could be there? Sorry? Outstanding expenses. Very good. So outstanding expenses could be the liability for a cooperative society, housing society. Yeah. Loans we already spoke about.
Deposits.
Can you elaborate? What do you mean by deposit? Sorry? Excess money received means? Okay. So you are saying by mistake or somehow you collected extra amount from the members and it's refundable to them. Okay, got it. Very good. What else? Somebody said deposit. It's a right answer, but without logic. So if you can think of what deposit is for a cooperative society, housing society especially. Okay. Savings deposit, a housing society. So a cooperative housing society can have its own means it can have an account in the bank, but that's an asset. That's not a liability. Deposit here means it could be, sorry. No. But that's the income. Whatever you collect from the members, the deposit from the members. See, sometimes the society may have made rules that if you want to renovate, okay, your flat or something, you have to deposit certain amount with the society. You have to obtain a no objection certificate, and then deposit will stay, because if while repairing your flat internally, if you damage the society or some other flat gets damaged, leakage, okay, even for the debris removal, whatever debris gets generated while you are renovating your house, your flat, that debris removal also has to be done. If you don't do it, then the society will deduct the money from your deposit. So long as that deposit is not refunded to the member, it stays with the housing society as a liability. Okay, fine. Anything else that you can think of? No? Okay, good. It could be any expense payable, as you rightly said, any expense outstanding, any interest accrued which is payable on the loans and all. Yeah, fine. Now, what could be on the assets? Okay, asset side of a housing society. Fixed assets. Very good. Okay, fine. So you will have all the fixed assets, your water pump, your generator, okay, any other equipments, the society building itself. Yeah, fine. What else? The lift. The lift is also an asset, right? For the society. What else? Apart from fixed asset, what else? Sorry? Yeah, investments, very good. Loans and advances. So if the society has, given loans to its staff or paid money in advance for expenses, prepaid expenses. Okay, so all of that comes under loans and advances. Very good.
Cash and cash equivalents.
Sorry?
Cash, bank.
Cash balance, bank balance. Okay, got it. Yeah, so if the members have defaulted, members have not yet paid, so money received from members, so dues from members, very good. Also, a society may have to deposit money with various government authorities, like with the BMC for Mumbai, BMC I meant Bombay Municipal Corporation. Okay, so you may have to have a water deposit or electricity meter deposit. So all those are like your deposits lying with those government agencies, and this money is receivable for you whenever you surrender the meter or something like that. So yeah, so these are few glimpses of what could be in the balance sheet of a cooperative housing society. Fine. So now I want all of you to take out your notebooks, okay, and let's start writing about. Uh, we first start with the format of income and expenditure account. Okay. Okay, guys. So I want all of you to start with the format of income and expenditure account that a housing society would make. So on the top, we'll write the name of the cooperative housing society. Then in the next time, we'll write the heading of the account that we are making. So income and expenditure account for the year ended 31st of whatever. In fact, I would want you to write the debits and credits also, which I have missed out on.
Should we write with the name of the-
Sorry? Yeah. Right with me. The left hand side is the expenditure side, the debit side, debit all expenses and losses. The right hand side is the income side, credit all incomes and gains. So in the expenditure side, there are three heads under which you will mention the various expenses. So this is the part that you need to understand, that which expense will come under which head. So the first head is the property expenses. How I understand this head is basically all the expenses to maintain the property, maintain the the assets of the society. All the expenses related to the property of the assets of the society will come under this heading. So the first thing in that is the property type. This is out of the society charges. There are two type of charges: society charges and service charges. Service charges are basically for giving all the services to the society members. Okay, so society charges is for the property. So under that, the first thing is property tax. Now, ideally, if you see, then a society would make the income and expense exactly in this format and this order, but practically it is nearly impossible for you to remember all these items in that particular order. So even if you just remember that a particular expense falls under property expenses ka head, I think it is sufficient enough. So property taxes. The second thing is the water charges. After that, the electricity charges. The common area we spoke about, the common passage area, the electricity consumed for running your water pump, for operating the lifts, in the parking area, the lights will be there. Yeah. And the next is the repairs and maintenance. The next is expenses on the lift, the elevator. The contribution to sinking fund. Sinking fund is also created for, expenses, major expenses which may come in future. Parking charges, expenses related to parking area. If you have taken the in loan, then the interest on that loan. Non-occupancy charges. What is non-occupancy charges? If someone is not occupying the flat, it is lying empty, then the society may be penalized by, the regulatory authority. Because if you see in a city like Mumbai, where space is always a constraint, keeping something non-occupied is like a crime. Not legal crime, but it's like we say in that sense, it's like a crime. It's criminal to do that. So if they are penalized for that, insurance. You may have to take insurance of your water pumps, your lift, your generator and the transformer, all of that. So insurance charges for that. The lease rent. If the society is on a piece of land which is on lease, then the society will be required to pay lease rent every year. All these, if you observe, are related to the property of the assets. non-agricultural tax. What is this? See, sometimes you may have converted an agricultural farming land. Okay, you may have used it to make a building over there. Now, ideally, a farming land is supposed to be used for farming only. You will have to take a permission to convert into NA. NA here means non-agricultural land. So for that, you may have to pay some charges, taxes. So that is non-agricultural tax. Any other charges? For example, you can have a clubhouse, the clubhouse expense, a swimming pool, there can be gymnasium, you know. There are also properties for the society, right? The swimming pool, the gymnasium, the clubhouse. So whatever are the expenses of the clubhouse or the swimming pool, even swimming pool has to be maintained, cleaned. The gymnasium will have to be maintained. So I'm not asking you to remember these expenses in this order only, but at least you should know what type of expenses come under property expenses. Clear, everyone? Then the second heading, okay, is establishment expenses. Means the office expenses, the management expenses. The above one were the expenses to maintain the property of the society. Now these are the expenses to manage the society. These are called out of service charges. These services are basically used equally by everyone. For example, the security, the watchman, the liftman. It is used by all the. It's a service. It's a facility. A security is a facility. Having a watchman, having a liftman is a facility. It's a service. Okay. So when the maintenance bills are raised, some expenses are divided on the area basis. And the service charges are divided on the basis of per flat. It is not on the area basis because it is assumed that the services are provided equally to all the members. So in this, you can have the salaries first. One of the major expenses, the salaries of the office staff. You will have society office in which you will have manager, you may have some staff. So salaries for them. Then office taxes and expenses. Printing, stationery, and postage. Conveyance. Sitting fees. Sitting fees is basically, it may be paid to the committee members for the meetings that they attend. Okay, as I said, it's actually a voluntary work, honorary work. But the society may feel that we are taking their time, we are using their time. So let's, remunerate them. So sitting fees for sitting in the meetings. Subscription to education fund. Or subscription to the housing federation or cooperative. Sorry, education fund. every society will have to also become a member of a housing federation. Disputes will be taken to the federation or cooperative institution. Similarly, the entrance fees that you may have to pay to become the member of a housing federation or cooperative institution. If your page gets over, don't ask me. Go to the next page and make the format and continue. Some of you will say, sir, how many more items, sir? I got it. Audit fees. Your accounts have to be audited. In fact, for the accounts to be audited, first the accounts have to be written. So you will have to also have an accountant to write, to record all the transactions taking place. So at some point of time, we'll write even the accountant fees. Next, the meeting expenses. The next is other fees. You may have to consult a lawyer, advisor, any other professional fees that you may have to pay. Electricity charges, this is for the maybe the office, the society office in which the electricity is consumed. Any other charges. Housekeeping. All this is to maintain the society, to run the society. These are the services provided. Security. CCTV will come under asset. The maintenance of CCTV will go under your property expenses. It is one of the properties that you have. It is one of the assets you have. So just as you have lift maintenance, you will have to maintain the CCTV also. You know. So the CCTV itself, the cost of CCTV will go in the asset, but for maintaining it will come in the property expenses. Here the security means those watchmen that you have, the people at the entrance of the society to note down the non-members who are entering in a register and all. Yeah. The accounting charges. Done. Can we go ahead? The third heading, that is other expenses. In this, they have mentioned only two. One is depreciation and the other is provision for tax. Okay. There is something more after it, but I'll come to that later on. Now for all these expenses, where will the money come from? They will collect the money from the members. So
How many heads?
sorry,
How many heads are
under incomes there are 4 heads. So collection from members for society charges. On the left hand side, the first thing your return is on the debit side property expense, which you pay out of society charges. So this is the society charges that you are covering, they are recovering, you are collecting from members. So here basically it is just the repetition of the heads that you wrote on the other side. You will recover for property taxes, you will recover for water charges, you will recover for electricity charges,
all?
almost. Repairs and maintenance fund, expenses on lift. So those who are watching recorded lecture can pause the video and complete this part. So I believe that all of you, including those who are watching recorded lecture, you are done writing this much. So now we move to the second heading, which is again money collected from members, okay, towards the service charges. And again, for all the expenses that we listed on the debit side, you have all the expenses. Whatever expenses are there on the debit side, all of them will be collected from the members. So again, those who are watching recorded lecture, please, you can pause the recording in this moment. I will show you all the way down so that you can write it all together. So apart from this, so basically all these expenses collected would be entered in the outer column. And then if you have made, the third head is for interest and dividend. So whatever investments the housing society has made on that, whatever interest it earns or dividend it earns will come under this head. And the fourth and the last heading is other incomes. Under this, we can have the tower rent,
power, right?
Yeah, basically from the mobile towers and all, no? You can have rent for advertisement billboards. You can have sale of scrap. Here everyone. And then finally, you will take totals. Now, one good part about the cooperative housing society, and this is only in cooperative housing society, is that you don't have to compare is the income more than the expense or not. You do always and always you to take total of the credit side only first. You have to always take the total of the income side first. Always. So we'll take the totals of the incomes here. All the incomes. We have the same total on the debit side, on the expenditure side. And then you find a difference between incomes and expenses. If the incomes are more than expense, the answer, the difference would be positive. If the expenses are more than the incomes, the answer would be negative. And this balancing figure is positive to surplus. If it is negative, then it's deficit. So this is the fourth and the last thing, which I said I'll come later on for it, is this part. The second effect of this surplus or deficit will go in your balance sheet. So now let's move to the format of balance sheet, guys. I would want all of you to spare a moment before we go ahead with balance sheet to just have a deep look at each and every item which comes under property expense. Keep telling yourself in the mind, this is the expense to maintain the assets, maintain the property. Property taxes, water charges, electricity charges. These are all expenses related to the property. प्रॉपर्टी को यूज करने का खर्चा. I'm not asking you to remember them in order at all, but at least you should know which item comes under the head of property expenses. Can I scroll down? Now you can see which items come under establishment expense, means the management expenses. Managing the running of the society. Administrative expenses, salaries, office taxes, printing stationery, conveyance, sitting fees, all of this, audit fees, meeting expenses, the electricity bill of the society office, housekeeping service, security ka service, accounting charges, all of this. In other expense, you have only two items. Which two? Depreciation and provision for tax. On the income side, this first two items of expense, the money is collected from members, so it is a replica of that. Apart from that, in the incomes, you have two more headings. One is the interest and dividend, in which you get interest on the savings bank account, interest on fixed deposit, and any dividends on the shares. and other incomes, any other income. It could be even rent from a, a society, a hall or something which is given for an event or something. Tower rent from mobile companies, rent for the advertising billboards and sale of scrap. Clear?
Yes.
Now let's move to the balance sheet, guys. So I want all of you to make the format of balance sheet, a liability side and asset side. Are you ready, guys? So there are many heads in the liability side and also asset side. Don't worry. Around 11. No joking. I'm not kidding.
So are you going to teach us right now or should we write?
Yeah, keep writing. The first is share capital. We intend to complete the format of balance sheet today itself. So start writing without having ideas about having it being sent to you on the group and then you writing it at home. So you can show your parents that you study and all, where you are simply copying. So in share capital, as usual, you will always have authorized share capital first, in which you will mention how many shares you are authorized of how much each. And then you'll have the subscribed capital, how many members have taken up how many shares or maybe given to them. Again, the difference between authorized and subscribed. Authorized is the maximum number of shares the society can issue during its lifetime. Subscribed is how many shares the members have applied for and taken from you so far. If there are calls in areas, then you got to subtract it. And if you have received money in advance, then you got to add it. This is much in detail, although during the sums you may not have all of it. Then the second heading is the reserve fund and other funds. The funds could be the statutory fund that it has to create, the sinking fund, building repair fund, building fund itself. Sometimes the society may think of redeveloping the whole building. So not building repair, but the building itself. Okay, lots of redevelopment projects going on in Mumbai, where they demolish the existing building and construct a new building with larger area, higher FSI, floor space index. So under this, the first thing you will have is your statutory reserve fund. You start with its opening balance. To this, you will add the entrance fees. I had mentioned to you earlier that when you make a new person a member, you will charge the entrance fees, and that is only when a person is made member, which is not a very regular phenomena. So it's not treated as income, it's treated as a capital receipt, and it's added same way the transfer fees. When a flat is transferred to someone else, okay. The next thing is any premium on transfer. Premium is the extra amount charged. Again, a capital receipt. Finally, if the statutory reserve fund was invested, remember, whenever a fund money is invested, any interest earned on that investment is not treated as income and not shown in the income side of the income and expenditure account. The interest earned on the fund investment is added to that particular fund. So if there is a building repair fund which is invested, so the interest on building repair fund investment will be added to the building repair fund. So always remember, the interest on fund investments is added to that particular fund. Okay. So the next thing is you add the interest on the fund FD. And the total of all of this, you take in the order column. Sorry? What transfer of surplus? I'll come to it. See, statutorily, every society will have to transfer 25% of its current year surplus to the statutory reserve fund. But the society has to first submit the reports, annual reports, before its annual general meeting. Once it is approved, only then the transfer is actually made. So this year's transfer happens in actually next financial year. So as a part of the syllabus, you don't have to show that transfer in your balance sheet. However, you have to make something called plan for disposal of surplus funds. It is just like extra note, extra information, but it is not part of your financial statements. I'll teach you that also, don't worry. If you want to see, I'll just show you. It's already here down. Plan for disposal of surplus funds. So don't worry, everything has its time. It comes at the right time. Okay. Anyways, just to show you how lengthy your balance sheet is going to be, just to show you. Yeah. So you can be mentally prepared. Let's go fast.
Yes, sir.
The next is any repair fund. I have included only one fund just for your example. There can be many funds. I hope you don't want to write those all of them in your format. So to that you add any additions made to that fund in the current year. Again, any interest on the fund FD, repair fund FD interest will be added to the fund.
Yes, sir.
And the purpose of repair fund was to finance the repair expense whenever it happens.
Yes.
So if you actually incur expense out of it, then you have to subtract those expenses. Then the final figure will come out.
Yes.
Okay. The third heading, okay, in this is just mentioned as other fund. There could be many more, but we'll just include only this if you don't mind. The third next big heading after reserve fund and other funds is the staff provident fund. You can remember you start with share capital, then your two funds. One is the reserve fund and other funds, and the next is staff provident fund. Clear? After that, there are two loans, secured and unsecured. So your secured loans, so you start with share capital, then your two funds, and then your two loans. Just for you to remember the order, the sequence in which these heads have to be prepared in the balance sheet. So under secured loans, there can be debentures, loans and overdraft, cash credits from banks, loans from government. And finally, any other unsecured loan. Then guys, after secured, next heading is unsecured loans. So loans, overdrafts, and cash credits from bank, if they are unsecured, you are not given any asset as a security. Any loans from the government or from others. Bills payable are also included under unsecured loans. Yeah, it is a liability. We are on the liability side. The next heading is deposits. These are the deposits taken by the society and it is payable back by the society. One of the major thing is, the fixed deposits. If it is accepted from the members, any recurring deposit accepted from the members, this will be mainly ideally in the consumer cooperative societies rather than housing societies. But since other deposits, the security deposits from the members, the next heading is current liabilities and the provisions. Your job between today's session and the next session is to go through these formats as many times as possible, because as I said, solving of sum is extremely simple. You simply have to segregate the whole of the trial balance into which item goes under which head. That's it. And some adjustments, which is not a big deal. But you will have to keep remembering which item goes under which head. Once you are able to do that, you are sorted for this chapter. So use the time between this session and next session to make sure that you've done that thoroughly. So outstanding expenses, outstanding creditors for purchases. The society may have purchased cleaning material, it may have purchased other things for which money is yet to be paid. Outstanding expenses, outstanding creditors for the expenses. It could be outstanding electricity bills, outstanding water bills, outstanding salaries to the staff. Advance from members. If any member has paid membership, the maintenance charges in advance, then it's a liability for the society. It's like a pre-received income. Income received in advance. Property tax payable. It is just like an expense payable. And finally, refund payable to members. If by error or something you collected extra amount from the members, you got to refund it to them. It's a liability.
Yes, sir.
The next heading, okay, after current liabilities and provisions is unpaid dividends. See, you can remember it in the groups. You started with share capital. Okay, share capital is Akela. Uske baad you have two funds, the statutory fund and other funds, and the staff provident fund. Then you have two loans, secured loans and unsecured loans. Then you have deposits, one head, and current liabilities and provision other head. Then the next two are like for outstanding or unpaid dividends and interest. So your eighth was unpaid dividends. Then this is interest accrued and due but not paid. It's easy to remember. Two in a pair. After these other liabilities, all kuch bach gaya, which doesn't come under any of the other heads. So other liabilities. Finally, the 11th is your income and expenditure account.
The last thing.
Under liability side. Last heading under the liability side. So in this, you start with the opening balance, which is nothing but the surplus, which was there till last year. The total of the surplus is basically the opening balance of your income and expenditure account. From this, you will subtract any appropriations. Now remember, this appropriation would be actually the last year's statutory reserve transfer of 25%, which was approved in the current financial year. So the appropriations would be here mostly for the last financial year, if you understand, because current year's transfer will be finalized only after the approval from the general body in the AGM. And then to this you add your current year surplus, or you subtract your current year deficit. See, normal companies or in banking company or insurance company and all, basically surplus, yeah, whatever is the profit for the year, out of the profit for the year you have appropriations. But here if you observe, the appropriation is surplus out of the surplus for the last year, because it's appropriation also for the last year, and then you add current year surplus or you subtract current year's deficit. And if there's a deficit, there is no question. There is no question of transfer to the statutory reserve, right?
Yes.
So this is it with the liability side. Now let's move to the asset side.
How many items?
Almost same. So the first heading is cash and bank balances. Okay, by the way, I want all of you to recreate with me. What are the heads in liabilities? First you start with? Then you have two funds, the reserve fund and other funds, and staff provident fund. Then you have two loans, which is secured and unsecured. Then the next two headings are deposits, and the next one is current liabilities and provisions. Then the next two heads are unpaid dividend and unpaid interest, right? उसके बाद other liabilities कुछ बचा तो, and finally income and expenditure account. Easy to remember. So basically you will have to find ways to remember. There is no choice. So yeah, under this cash in hand, cash in the banks, in the current account, savings account, there is no point leaving this halfway, because I think if you are ready with the format of balance sheet in this session, next session we can start with the sums. It will not take more than 7 minutes if you support. After cash and bank balance, the next heading is investments. The next heading is investments. So you can have investments in the government securities, other trustee securities, non-trustee securities, shares of other cooperative societies, shares of Maharashtra Development Corporation Cooperative Bank, or shares of MDCH Federation, Housing Federation, shares, debentures or bonds of companies, fixed deposits, fixed deposit for sinking fund, fixed deposit for repair fund, fixed deposit for major repair fund. See, this is an exhaustive list. Means later on if something comes, sir, ये तो आपने सिखाया नहीं था, sir. ऐसा कुछ नहीं होना चाहिए. Basically, all your shares, debentures, bonds, FDs, government securities. See, in this chapter, you don't have to make separate schedules like you make in the company accounts, you make in the banking accounts, you make in the insurance company accounts. So one good thing is you just make the heading, list down everything over here. No need to make separate schedules and then bring the figures here and all of that. Okay. Unfortunately, in the asset side, you don't have something like in the income and expenditure you had, same things coming on the credit side. Some people had the liberty to write same as debit side. Okay. I know many kamchors would have done that. Done writing this much? Easy to remember the next one. After investments, the next is what is the third heading in the liability side? If you remember, third heading. So here you have staff provident fund investment. Clear? Can I go ahead? I hope you are done with this much. The next is loans and advances. Basically, this means if the society has given loans to some of its staff or some other cooperative society, or maybe any expense paid in advance, any tax paid in advance, all of that. So loans given, prepaid expenses. After loans and advance, next heading is sundry debtors. For a society, the debtors are the members because the society has to mainly collect the money from the members. So dues from the members, advance to the staff, the money received from builder. Property tax refund due. If you have to receive the property tax that you had paid extra, it will to be received from the department. After sundry debtors, the next heading is current assets. So again, in the pairs of two you can think of. You started with cash and bank, then the pair of investments and staff provident for investments, then the pair of your are you listening? Yeah. So then the pair of loans and advances that you're given and the debtors from whom money is receivable. And then there are two pairs. One is current asset and the next is fixed asset. So under current assets, mainly you have all the stocks and all, basically. So stores and spare parts, the loose tools, the stock in the trade, or work in progress. See, for a cooperative housing society, it's very unlikely to have work in progress and all, but you can have stock of the cleaning materials, stock of the stationery, and all of that. The next heading, as I already told you, is fixed assets. Under fixed assets, all the fixed assets that you can have, the land and building, the leasehold premises, plant and machinery, the equipments, water pump, bore well, furniture and fittings, Now they've written livestock, but for me, livestock can't come in a housing society. What you will have dogs and Dobermans or what for security? But for a milk cooperative societies, they can have the cattle and all. So they've picked up the balance sheet for all the societies. So vehicles, even the lifts can come here. Basically, it can come under plant and machinery. Lift is a machine.
Yes. Yes.
Done, guys?
Yes, sir.
The next heading is Mrs. Expenses and Losses. So here basically you mention all those past expenses which are still not recorded in the expenditure side. Basically the expense is not written off. Now they've given in the format goodwill, but it's surprising, but still it is there. Okay. Why a housing society will have goodwill, I don't know. But preliminary expenses, the expenses to start the society, expense on issue of shares or debentures. Borewell is basically nowadays it is compulsory for most of the societies to have a bore well, okay, which is not a drinking water. The drinking water is supplied to you by your municipal corporation. The bore well water is used for using in the toilet for flush tanks and all. So it's not a potable water. It's basically for toilet purposes and all. Not even for bathing. Okay. Deferred revenue expenses. Building renovation expenses. You are renovated building, but you're still not, charge the expenses to the expense side. And after this, the other items. In other items, you have all the deposits which the housing society has given to authorities and the interest accrued and all. So interest accrued but not due. Other items, electricity deposit, water deposit, etc., etc.
Next.
The next one is income and expenditure account. If your income and expenditure account of the earlier years had debit balances, basically the society was in deficit. It did not collect sufficient amount from the members, only then it is possible. Or the members defaulted and they did not pay and all of that. Finally, current losses. So when your income and expense account has a debit balance and then you also on the top of have the deficit, current losses, it will come on the asset side. And finally, as usual, at least during the tuitions, your balance sheet will tell you. So I know you are happy that the lecture is over, but the work, a lot of work needs to be done before you come for the next session. My request to all of you is please go through these formats as many times as possible to just have in your head which item comes under which head. Once that is done, I promise you it's going to be easy for you. Any questions before we wind up?
No, sir.
Bye-bye guys. Thank you so much.